ULTA Beauty, the beloved destination for beauty and skincare enthusiasts, has seen its stock plummet by a staggering 29% from its previous peak. And investors are left wondering if this retail giant's recent stock performance signals some temporary issues or some deeper problems. Could this sharp decline represent a golden opportunity for long-term investors to buy this quote-unquote multi business at a discount? Or is it a warning sign to steer clear of the stock? In this video, we'll take a look at the factors behind ULTA's recent bad stock performance, analyze its current valuation, and we'll explore the potential for a remarkable rebound of the stock that could see the stock of ULTA Beauty double over the next 5 years. So if you don't want to miss this, stay tuned, and without further ado, let's get started. Alright, hi there, my name is René Zellman and this channel is all about long-term investing in high quality individual stocks. And today we're going to take a look at ULTA Beauty, and I want to start by taking a look at the stock's performance over the more recent years. So first of all, I want to show you that year to date, the stock is actually down around 20%. If we take a look at the decline from the previous peak of the stock, ULTA Beauty is actually down almost 30%. And what may be the most interesting statistic here is that if we take a look at the 5-year stock chart, we can see that ULTA Beauty stock almost hasn't moved at all and it's almost flat. And if we now combine this with a look at the business fundamentals, look at how the company developed on a fundamental operational level, this is where it gets a little interesting. So what you can see here, for example, is that the revenue of ULTA Beauty since 2017 has actually more than doubled. The operating income almost tripled, and the EBIT margins, so those are the operating income margins, they also are fairly solid. Similarly, ULTA Beauty is profitable on a free cash flow basis. In fact, the company is growing its free cash flow fairly consistently, especially if you take a longer term view. And on top of that, ULTA Beauty is also a so-called share cannibal, meaning they are somewhat aggressively buying back their own stock, which leads to the pie that investors can own shrinking, which is something positive for those who continue to keep their piece of the pie in their portfolio, metaphorically speaking. If we take a closer look at the exact numbers, we can see that the number of diluted shares outstanding was reduced by 3, 5.6 and 4% over the last 3 years, which of course is leading to more attractive growth on a per share basis. So I think we have to start by taking a look at what ULTA Beauty actually does. What is their business model? And as I hinted at in the introduction of the video, and as many of my viewers will already know, ULTA Beauty is basically the leading beauty retailer in the United States. ULTA Beauty operates retail stores selling cosmetics, fragrance, hair products, skincare products, of course, also some accessories, and they offer some beauty services as well. Then they offer both a broad assortment of branded products, but they also have their own labels, their private label products. And maybe finally, to wrap up this brief description of their business model, you might wonder, how is ULTA Beauty distributing their products? Well, obviously through the large store network, but also online via their e-commerce website. And of course, also mobile applications. All right, so why do I find ULTA Beauty interesting? Because generally speaking, I have to say that retailers as a business model, are businesses that I usually tend to avoid, because retail is just a very tough business. And I think Monish Babrai actually once said, it's kind of a quote that stuck with me. He just said, "I hate retail." And why is that? I just said it's a tough business. And that's because retailers, for the most part, they are not selling differentiated products, which means they have no pricing power. They usually sell commodities, and if there starts to be a material amount of competition, well, competitors will simply keep undercutting each other's prices, leading to very low profit margins if the companies are profitable at all. And then they have to make up for the low levels of profitability by increasing the inventory turnover. But of all the retail businesses that are out there, a cosmetics retailer is probably one of the few retailers that I find more interesting, that I would be more comfortable investing in. And that's because the demand for beauty and cosmetics products is relatively stable and also relatively predictable. The stability of the demand for beauty products is visualized in this chart here, and it shows that even during the COVID lockdowns, where basically everyone was stuck at home and where you arguably didn't have to worry about how you look like. Even then, the sales of the cosmetics market only declined by 6.4%. So apparently people always want to look attractive, even if they're stuck at home. Arguably, you may postpone the purchase of, say, new furniture, but people aren't really going to postpone the purchase of beauty products that cost them somewhere in the range of a few dollars to maybe $100 and more. So put differently, I would argue that Ulta Beauty is a relatively recession-proof business that isn't particularly cyclical. And those are features, characteristics of businesses that I like to see. And finally, I want to highlight that I have a hard time seeing the beauty industry being fundamentally disrupted by new trends like AI. I think the long-term trajectory of that industry is fairly easy to predict, which makes, of course, valuation a little easier, and we'll get to valuation later in the video. There are a few more things about the business that I would like to highlight. I think one of the strengths and also a competitive advantage of Ulta Beauty is their loyalty program, their membership program, which creates some kind of stickiness. And in this context, one should probably also bring up the omni-channel business model of Ulta Beauty. So oftentimes people will go to the store because for certain products, an in-store presence is actually needed. If you want to smell the smell of a fragrance, for example, or sometimes if you maybe want to choose the right tone for a makeup product, you have to be there in person. But once you have found your product, you can actually then switch to ordering that product regularly online, as I said, via the app or via the e-commerce website. And I think if you now combine the scale of the store network that Ulta Beauty possesses with the omni-channel approach, I think you have a reasonable level of stickiness for a retail business here. And maybe finally on the point of running an omni-channel business model in the beauty space, I think this approach is actually more established than in other product categories. I used to own an eyewear retailer, Mr. Specs. That's a German eyewear retailer, for example. And I would argue that in the eyewear space, when you get new prescription glasses, it's less intuitive to order glasses online. So if I would compare these two businesses, just with regard to the products they are selling, I think Ulta Beauty is the superior business and a stock I would rather look at. And just to give you more context on the scale advantages that Ulta Beauty may possess, I just mentioned the large store network. As of today, Ulta Beauty has a store network of over 1,350 stores nationwide, and they also have fairly large store spaces. And arguably, Ulta's store network is even larger because they also have a partnership agreement with Target that allows Ulta to run 500 additional dedicated shops in Target stores. So that brings you to a total of around 1,850 stores. And again, to put this into context, Costco, as of today, runs 611 stores in the US, and there are almost 2,000 Target stores. So this kind of demonstrates the massive scale that Ulta Beauty has already reached. And all of these factors combined, I think they give Ulta Beauty a moat. And I recently read a write-up on Ulta Beauty that kind of beautifully summarized everything that I had been saying. Let me just read it to you. So the author wrote, "In retail, it's also hard to be the low-cost supplier. However, American businesses seem to have figured a formula for this. Large store space plus high store count equals high inventory turnover. This is the same formula that all the low-cost suppliers like Walmart, Costco, Nebraska Furniture Mart apply. If you have many large stores, you can put higher orders up front and get the lowest price possible from the original manufacturer, so you can sell at lower prices and have high inventory turnover." All right, and I promise you I'm almost done with the business side of things before I then move on to valuation. What I would finally say, to wrap it up maybe, I think Ulta Beauty has historically also been a very good business. I'm just going to show you the return on capital figures the company posted over the last couple of years, and we can see that in many years we saw return on invested capital figures of around 40%, which is pretty impressive. Then on top of that, Ulta Beauty has almost no debt, basically could pay off all of its debt within 1 or 2 years if it would allocate most of its free cash flow to the debt reduction. Earlier, I also showed you the profit margins, which are not insanely high, but you have to keep in mind that we are looking at a retailer. But for a retailer, they are definitely looking very good, and they are also fairly stable. Okay, and then finally, I would like to stress that ULTA Beauty is, of course, a consumer-facing business. And generally speaking, consumer-facing businesses are easier to understand because we have actual touch points with the business. You might have visited an ULTA Beauty store. Personally, I haven't because I don't live in the US. So that is kind of holding me back a little bit. For context, as of the time I'm recording this video, today it is Friday, I haven't purchased any ULTA Beauty stock, but I may do in the coming days. I'm not sure yet. And this brings me to valuation. So first of all, in a nutshell, why has the share price gone down? I think there are two main reasons. The first and most important one may be that we have seen growth slowing to some extent, and we also saw management guiding to slower growth going forward. And then on top of that, there may be worries about competition, specifically with the competition arising from Sephora. Then, with regard to valuation, let me just show you what kind of valuation multiples ULTA Beauty is trading at right now. So we are looking at a business that is trading at a next 12-month enterprise value to operating income multiple of around 12.2. And we are looking at a company that is trading at around 15 times earnings. So last 12-month earnings. So I was running two valuation models here. One is a margin at maturity approach. So I was taking a look at the revenue that ULTA Beauty generated more recently, which was $11.3 billion. I was then assuming 6% annual growth over the next 5 years. And I was assuming that in year 5, ULTA Beauty will post operating income margins of around 12%. I then kind of slapped a 17 times multiple on that operating income generated in year 5, and that gives you a 5-year internal rate of return of around 10.6%. Now, what this model here doesn't take into consideration is the fact that ULTA Beauty, as highlighted earlier, is fairly aggressively buying back its own stock. So if we assume that over the next 5 years, ULTA Beauty will also reduce its number of shares outstanding by around 3% a year. I assumed 3.3%. We get pretty close to a compounded annual return over the next 5 years of 14%. If we now apply the rule of 72 to figure out how quickly our investment will double, we are getting pretty close to a double over the next 5 years. And we didn't have to assume any crazy assumptions here. Keep in mind, we were going for 6% growth and a decently aggressive share reduction. I think we are adding a margin of safety here, or management is adding a margin of safety, as they are showing the willingness to reduce the share count aggressively when they think the stock is trading at an attractive valuation. If, on the other hand, the share price shoots up again, then management probably won't be sticking to a share reduction of 3.3%. But then you get your return from another source, from the multiple re-rating. All right, just real quick, let me show you the other valuation approach that I used here. So I was just looking at the net income generated by the business, which was $1.25 billion. I then assumed 10% growth. So here I assumed basically per share growth. And if the company can grow its earnings on a per share basis at a rate of 10% over the next 5 years, and then trades at an earnings multiple of 17 in year 5, well, then we are getting a return of around 13% based on the current share price. Okay, to wrap it up, I think I also have to briefly address the risks that investors are taking on by investing in ULTA Beauty. I was previously addressing that competition, especially in the form of Sephora, is definitely a risk that investors need to be aware of. I was also reaching out to someone I engage with on Twitter quite frequently. He's called Heavy Mode Investments, and I know he's quite familiar with ULTA Beauty, certainly more familiar than I am because I only started looking at the stock and the business more recently. And I asked him, what are you worried about? And he said, generally speaking, he's also rather optimistic considering the current share price, but things to be aware of is the competition from Sephora, I just mentioned that, then weak consumer spending, which of course would rather be a short-term quote-unquote problem. Then the potential impact of retail theft. This is something that apparently has become more and more common in the United States. If you have experienced this yourself, share your experience in the comments down below. And finally, well, this slowing growth. So we are certainly no longer looking at a company that is growing at a high teens rate. At least it's not growing its top line at such impressive numbers. Okay, and that's it. Let me know what you think of ULTA Beauty stock, and I'll talk to you in one of my next videos. Take care.